So today's meeting is about our company performance. Our stakeholder demand for more information from us. So we need to improve the way we disclose this information. So I suggest to apply interim reporting. Can anyone explain about the interim reporting?
Okay, let me brief a little bit about the interim reporting. By the way, it is the reporting of the financial results of any period that is shorter than a fiscal year. Interim reporting is usually required of any company that is publicly held, and it typically involves the issuance of either 3 or 4 quarterly financial statements of each year.
Sir, can I know what the standard you use for interim report?
The standard we use for interim report is MFRS 134. This standard specifies the minimum content of an interim report including disclosure. It also sets out principles on recognition and measurement. But this standard does not highlight the preparation of interim financial statement to which company need to prepare. It also does not set out how frequently or how soon after the end of interim period that an interim report should be produced.
Does the minimum content of interim report is as same as annual report?
Yes, the content of interim report is same as annual report. It contains 5 minimum contents. First is financial position. Second is comprehensive income. Third is changes in equity. Fourth is cash flow. And fifth is selected explanatory notes. Shazana, can you call our staff Amalia from US?
Okay, sir.
Hi Amalia, how are you there?
I am doing fine.
We know that our company in US have applied interim reporting since last year. So we'd like to ask you about the advantage of applying interim report.
So the advantages of using an interim report is actually helps in establishing a better connection with the investor. It also very helpful for big conglomerates that are running multiple lines of business, helping them in tracking if their short-term initiatives are in line with the long-term strategy. For the material misstatements such as fraud, errors in the financial statement can be detected and prevented at the early stage compared if you're using an annual report. It also helps in implementation of comprehensive internal control procedure, which further makes accounting policy robust. So, it's very helpful and useful if you're using an interim report rather than you using an annual report. Thank you.
So thank you for sharing and have a good day. Bye.
Okay.
Thank you, Mama.
Bye.
Thank you.
Welcome.
Shazana, how about the survey that I asked you to do last week?
Yeah, I will explain the survey result after we do the survey for about 2 months. For the past 2 months after we conduct the survey, for the employee, 72% they agree to apply interim report, and for the shareholder, 65% are agree to apply the interim report, while 5% are unknown, not sure their result, and for user, 95% are agree to apply the interim report. So we can conclude that the result is 97% are agreed to apply the interim report for the company. Thank you.
By the way, we need to consider several factors in constructing this interim report, which are the first one, accounting changes. If there is a change in the accounting policy or accounting estimate, report the results of the change in the interim report when it occurred. We should restate the interim results of prior periods when there is a change in accounting policy, but not when there is a change in accounting estimate. The second one is accounting policies itself. We should consistently apply the same accounting policies used for the construction of a full year financial statement. to the construction of interim statement.
The last factor is materiality. If an item is material to the interim report but not to the fiscal year as a whole, then disclose the item separately in the interim report.
But I think there must be some difficulty too, such as difficulty in matching. Business activities are not similar and uniform throughout the accounting period because of very standard relationship between cost and sales. Difficulties are created in matching costs and revenues. Interim accruals for various expenses that normally require companies to rely heavily on estimates. The problem is also multiplied due to the tendency of investor to project a full year's result on the basis of data given in interim reports. Seasonal business also raise a problem about matching of revenues and expenses during the accounting period.
Other problem is inventory problem. In a business enterprise, inventory is a major element in the generation of income. Inventory problem in interim reporting has three types of problem. There are determination of inventory, quantity, valuation of inventory, and adjustment of valuation. However, the valuations problem is more important than the quantity problem. It is almost invariably considered impractical to count and price the inventory every quarter or every month. So, estimate of gross profit must be used to determine of cost of goods sold. Alternatively, the company may have perpetual inventory record integrated with the accounting record, allowing direct determinations of cost of goods sold, but the perpetual record may not be verified by cycle counts, and some interim allowance will be needed for annual physical inventory adjustment. The inventory problem is further complicated for the company who using the last in first out method, since this company must estimate not only the gross profit on their sale but also the effect of inflation and the year-end inventory quantity level. It is said that for the business firm adopting LIFO method, interim report may be a problem if the inventory level at the end of the reporting period is below than at the beginning of the year.
So, the other difficulty if we apply interim report is interim period reporting is naturally an attempt to ensure that report users have reliable information on which to base their decision. Interim reporting presents particular problems in the context of audit. The urgency of timely reporting both precludes a full external audit and increase the chances of the inaccuracies arising through estimation and allocations. Furthermore, narrative comments are less easily validated or assessed for accuracy and completeness than well-defined numerical disclosure.
The last but not least, there must be an extent of disclosure problem. There is a problem of deciding the quantity of disclosure in interim financial reports. Generally speaking, disclosure requirements applicable for annual reporting are not applicable to the interim reporting. In the absence of mandatory interim disclosure, the interim disclosure practice are likely to vary. There is a problem of determining materiality criteria for deciding the information to be disclosed in the interim reports. The treatment to be given in respect of prior period adjustment, extraordinary items, and earning per share can create difficulties in the interim report.
Yes, I agree that there might be difficulties, but any problem have its solution. So, do you guys have any suggestion to solve it?
So one of the solutions is allocating annual cost to interim period on basis of sales. Reported profits tend to vary with sales when costs of the year are allocated to interim periods on the basis of periods portion of total yearly sales. Interim period costs and profits vary, which sales is beneficial to the investors who are interested to forecast annual profits because forecast of sales can then more easily be translated into profits.
Another solution that we can use is adopting fiscal period to operating cycles. Problems related with accounting can be minimized by having a close date which coincides with a time of low activity in companies' natural operating cycles. Business facing more than one business cycle during a year can improve the significance of period statements by reporting for seasonal cycles rather than for calendar years.
Okay, the next one can be the disclosure to add interpretation. Investment decisions are based on future expectation rather than past performance. A view of expectation of management by interim periods would seem to be helpful. Disclosure of the procedures followed may help the users to interpret the results accurately.
The last suggestions are smoothing income to minimize fluctuations. Recording method for smoothing interim income include accrual of anticipated expenses which related to the whole year rather than reporting them when they arise.
Okay, I agree with all solutions. Please proceed the interim report and update me any progression of it. That's all for today's meeting. Thank you and dismiss.